welcome to Real Estate Investing Conversations with Adanna.
It takes a village.
A wise person once said, the best revenge is your paper. So why not invest in real estate? Today we're talking with Camile Case, CEO of Inclusive Properties, about private lending. So hello everybody. All right. Hi Camile, how you doing?
Good. How are you guys?
Good. So I won't take too much of everyone's time. Just give us a little bit of information about your company, Inclusive Properties. Tell us what services your company provides.
So our basic services are real estate investment loans. So we'll do residential, commercial. Residential is anything from 1 to 4 units. Commercial is going to be anything from 5 units plus your retail, your hospitality, that type of stuff.
Okay.
We also do financing for business loans, lines of credit, because we kind of bridge the gap when investors come in and they maybe not have enough cash to put down on a particular deal.
Mm-hmm.
So we'll give them business loans, business lines of credit, or personal lines of credit. We also have a credit repair partner. So if clients come in with a low credit score, we try to match them up with that credit repair partner to help boost their score up so they can conform or get better rates and terms for their particular deal, depending on the scenario. And we also do pretty much anything like kind of venture capital based. Anyone that needs a JV or equity partner in any kind of deal. We have anything from resorts that are being constructed to people that have gold mines that they're trying to dig and mine the gold and commodities, different types of minerals. So pretty much anything when it comes to finance, we can have that connection to connect you guys with the right people if you're looking for financing or funding.
All right. So as far as the financing is concerned, especially for multifamily, so you're talking about the commercial over 4 units. Mm-hmm. What are some of the qualifications for that? So for whether you're looking at a single person that's purchasing a 5-unit or higher, or you're looking for a group of people that have an LLC or some type of partnership, is that looked at differently? So how will you look at those type of applications?
So as far as the real estate commercial, that's all asset based, which means we look at the property, what kind of income the property is generating. Is it generating enough income to cover the mortgage, taxes, insurance, and any other costs associated, any expenses to operate that building? We're not really looking at the buyer per se. We'll go all the way down to a 500 credit score. It's really more so based on the asset. But it also depends on where the asset's located. We like populations over 100,000, over 200,000, where it's, populated. We know there's going to be income coming into that property. We're not going to have any issues, especially in an environment like this that we're in now with COVID and the pandemic. A lot of people are jobless and can't pay their rent. So it's usually those areas that are always thriving, urban, developed areas that will keep their capacity, and renters will be there, they'll be paying their rent, etc.
Okay. Yeah, and that's an important point too, because you said that, hey, we're not necessarily looking at that person, we're looking, and I'm sure you look at the person too, but you're looking at the deal, because if the property doesn't make money, you don't get your money type of situation. Exactly. So I think that gives a segue into what makes you different between going to a regular bank versus coming to you and working with you.
So if you go to a regular bank, it's going to take anywhere from 60 to 90 days to close. We can close in 2 weeks, depending on the size of the loan, 2 to 4 weeks. But usually if you're doing fix and flips, purchases, rentals, simple things, it's usually 2 weeks or less. When you get into those higher units, let's say you're doing a 200-unit apartment building, that might take 30 to 45 days just because of the inspection. We have to have the appraiser go out there and go through that entire building, so that might take a little while.
Right.
But when appraisal reports comes back, we usually close within 72 hours of receiving that report if there's no issues.
Okay. All right. So,
Also, like
uh-huh.
we're really just looking at the asset. We're looking at the rent rolls for the property. We're looking at the occupancy, the expenses, if everything makes sense, if the property debt services, that's pretty much it. And then as far as the borrower, all we're looking at from you is that you have somewhat decent credit, no bankruptcy, no foreclosure, nothing like that. And then no financial crimes, nothing in your background, no felonies. And what else? As far as the buyer, as long as you have your money, we ask you for 2 months bank statement, wherever you're going to be, wherever you're getting that cash from with your down payment. We don't require seasoning. You can get it from a brother, someone overseas, wherever. We don't care. As long as it's in a U.S. bank account, it has the company's name on it. You deposit the money yesterday. You get a letter from the bank that says that deposit is there and is available, and that is enough to cover your 20% down plus closing costs. That's all that matters.
Okay. So I know too, you all sometimes offer down payment assistance, or you have some alternatives or some unorthodox ways to make those down payments if you don't have the cash.
So the down payment assistant, we don't do that really. That's more on the residential side, conventional side, where it's like a first-time home buyer or something like that. We do creative financing. So if you need down payment assistance, that goes back to the business lines of credit, the personal loans, things that we were talking about to bridge that gap. Also, if you have a good relationship with the buyer or the seller and they're flexible in being creative, there's plenty of ways that we can construct a deal to make it work where you're bringing little to no cash to the table.
Okay.
So I'll give you an example if you want.
Yes, please.
Okay, so I have a client now. There's a building in Ohio. It's an 18 unit. It's vacant. The seller is overseas, doesn't live here, doesn't want to deal with it, especially now with everything going on with the pandemic. They just want to get rid of it. So the buyer is gonna make an offer to the seller. They're asking $200,000, but the property is vacant. It's been sitting vacant for years. So they're gonna make an offer that says pretty much we're gonna give you the purchase for whatever the appraisal comes back at. That's gonna be our purchase price because that's what we fund as a lender. It's gonna be the purchase price or the appraisal value, whichever is lower. So even if he wants $200,000, the appraisal comes back at 50. We're only lending you 50 because it's not worth to. You're going to put it down. That's a short sale type of thing. So they're going to put forth that offer. So what we do on a multifamily, we do 80% of the purchase price, 100% of the rehab. So that means technically this client, I think, is putting about $500,000 into the rehab to get these units rent ready. So they'll get 80% of that purchase price, or the lender might say if they don't have a bunch of experience, they look at their financials. So we'll get your personal financial statement to see where you are financially and if you have enough cash to either have the interest reserve or the interest only payments for the loan for whatever term it is going to be for. And that's it. So they could potentially be going into that deal with maybe 50 to 75,000, and that's just their interest only payments. And their down payment towards that purchase price since it's so low.
So also too, so since it's not like going through a bank, will this be on your credit report? How does it mess up your debt ratio? How does that work too?
Nope. So every loan that you do, it's going to be in an LLC. So you can create an LLC anytime prior to closing. There's no seasoning, nothing like that required, because we can always structure things creatively. So as long as you create an LLC, we'll put everything in the LLC's name. When you open up that account, it's going to be a business bank account. You put that in the LLC's name. And it doesn't report to your credit. We'll pull your credit to see what your score is because your score determines the interest rate.
Right. Okay.
The score drives the interest rate and the LTV. So for example, right now, our 30-year rental program, it starts at 6.25%. The people that are getting that 6.25% have a 720 or higher. If you have anything lower than a 720, then the rate bumps up another half a point. So it might be 6.75 for someone that has like a 680. So it's
Okay.
bumping up the lower. There's different tiers when it comes to credit and LTVs and things like that. So that's what your credit score drives in the loan.
Okay. All right. So if someone wants to deal with you, what all documents do you need? What do you need for you to review information? Because I know you did talk about getting the information on the deal.
Mm-hmm.
So what else would you need besides that?
So what we typically do is a one-page app for a soft quote. Matter of fact, if you can can I share my? All right. Is this big enough? Should I make it bigger?
Yes. You can make it a little bit bigger. Yeah.
So this is the personal financial statement, PFS. So this is what I'm saying as far as seeing what you're working with when we're looking at that 20% down plus closing.
Right.
So we want to see that your income is somewhat stable and you have enough cash on hand, what your asset mix is, what your liability mix is. It just gives us a snapshot of your net worth. So that
Now, if a person has an LLC and there's like 10 people within that LLC, do you need this personal statement for each person?
So we only need whoever has 20% or more stake in the company to be a guarantor on any loan or to be a signer. Some loans we can do non-recourse, but the signer is 20% or more interest in the LLC.
Okay. Okay, that's good to know.
And that can change easily. For example, I have a fix and flip right now. It's a husband and wife. He does, the fixing and flipping himself, but he had his wife on the operating agreement. So all we did was tell him to take her off the operating agreement and we could close in his name alone.
Oh, okay.
So if you have 10 people and only two, you want to put whoever has the highest score, because if it's 3 people, that's 20% or more ownership, we're going to use whoever has the lowest score. We're still going to run all of your credit, but we're going to use the lowest score to qualify you.
Oh, okay.
So if someone has a low score, kick them off the operating agreement. You can put them back on after the loan stage. All we need is just a sign off from everyone from that LLC to say that they give this person permission to sign on this loan.
Okay, good to know.
So what else do we have? Track record. This is just to see your track record, what you've done.
Mm-hmm.
So when you're doing a multifamily project, usually they want to see a little bit of experience or that you have a GC with experience, and you can partner up with a GC or partner up with different people to have experience, and you can show that here. But this is what this track record is for. It's just to show what you've done, and we verify that because that affects your pricing. That's another tier type of thing. So if you have like one deal done, you're going to get qualified for a certain LTV. If you have 2 or more, 3 or more, you get a higher LTV, the more experience you have. That's how that works.
Oh, okay.
So this form is like you would list everything that you have. We literally go and check it. So you can't really falsify anything because we're going to check. Make sure that you're actually part of that LLC, part of that transaction. You're on the closing statement, all of that.
Okay.
This is a one-page app for commercial purchase. So this is pretty much what I use to get you an initial quote. So I'll need the application, the personal financial statement, the track record. Pretty much if you're a citizen or not, your name, your ownership percentage, that's what we were just going over, the LLC name, your estimated FICO, what you want your closing date to be or what it is if you have a purchase contract, property address, any photos for the property, if you have it under contract or not. The rate that you budgeted for. So a lot of people will say, oh, I want the lowest rate. But if you're basing or budgeting your mortgage payments and everything based on a certain interest rate, you have to put that here so that we know because
Right.
debt services won't make any sense, and we'll know which direction to take the loan. So we'll know if you want 3-4%, we're not going to have to go conventional.
Right.
If we're going to go conventional, that's where the PFS comes into play a lot, because then we'll see if you'll be able to qualify conventionally, because we'll be able to see your debt, your income, and see what your ratio is, because that's what is going to be needed to go conventional.
Okay.
Tax returns, full doc type of thing, but that you'll get the lowest rates. If
Okay.
you might have to submit tax returns, things like that, we go private, and those rates are a little bit higher. So conventional is going to be 3 to 5%, and then private is going to be anywhere from 6 to 8%. And yeah, so that's pretty much it. The type of property, how many units, square footage, purchase price, the as-is current market value as it is today, the exit strategy, what you're going to be doing. Are you going to be holding long-term? Are you going to be refinancing? Is occupied or vacant? Your rent rolls, we want that. Your taxes, experience, the cash you have available to close. And if that doesn't make any sense, we'll tell you right then and there, hey, you don't have enough cash to close this deal. How do you want to bridge that gap? Do you want a business loan? Do you want a personal loan? Do you want a JV partner? And that's it. That's pretty much the app right there. So if you're dealing with multifamily, this is the rent rolls that we usually request. If you already have one in Excel, that's fine. But this pretty much breaks down the property address, the number of units, vacant, etc. Any Section 8, how much rent you're collecting, when the property was occupied, when the lease expires. That is your rent roll.
Okay.
So we'll need that for every property. So even if you're looking at a property to acquire it, make sure you get this from the owner, because you want to make sure the property is generating an income and that
Right.
it's enough income, because the property is going to be paying for itself. So definitely ask them for a rent roll if you're looking at anything. That one was for multifamily. This one is for commercial. So if you have like an office building, industrial building, warehouse, whatever, this is what that would be for. So same type of gist. When they occupied, how long the lease is for, how much the expenses are, etc.
Okay.
This is the operating statement. So this shows your property's expenses. That's the most important thing that we're looking for, because we want to make sure it's generating enough income from those rent rolls to cover these expenses.
And and the person that's selling the property should have this as well. They're trailing 12, so they call it the T12.
Mm-hmm. This should be
Yeah.
pretty much their P&Ls.
Right.
Yep. And that's that. I think that's pretty much it. Doc-wise. So the application process up front is pretty simple. We start out with the quote. With this one-page app, we just get a brief snapshot of the deal, what you're trying to do. We run the numbers, make sure it makes sense. If it does, and you agree to the terms that we quote you, then we move into a regular full application, which might be anywhere from 3 to 5 pages, depending. And once we have that application completed, you have the property under contract. We order an appraisal. That's the first step to closing. So once we order the appraisal on multifamily, it usually takes a week or 2, depending on how big the property is. It could be 3 or 4 weeks. But once that appraisal comes back, as that appraisal is going on, we're doing our underwriting. So we'll collect from you a closing checklist. Let me pull that up, actually. Commercial too. So the closing checklist is pretty much like your entity docs. We'll have the full pay application, like I just said. We'll get your schedule of real estate loan, your track record. There's a fraud policy that we have you sign off on, your fee agreement as far as how much we're going to charge you, all your entity docs, your articles, your operating agreement. Like I just said, if you have multiple partners, we can figure out how to structure the deal up front. Your EIN, your ID, social security card. We want to make sure you are who you say you are and that you're legally able to sign for what you're signing for. Your bank statements last 2 months, just to make sure you have enough for the down payment. Your purchase and sales agreement. and that's it. These are more so if you're doing construction. So if you're doing a ground up construction, you need just, bios, appraisals, a little bit more details when it comes to construction. We'll order title. Once your appraisal is out, we'll order title, your insurance, binders, everything to be updated prior to closing. So pretty much we're working while that appraisal is going on. So when it comes back, all we're doing is reviewing the appraisal, make sure the numbers make sense, and then we schedule, we issue a clear to close, and then we schedule closing. This is for 1 to 4 units, same thing pretty much. Any questions from anyone?
Yeah, I was going to say I'm going to open it up to if anyone has any questions. Please feel free to ask Camille.
Camille, this is Yuri Cooper. So from your experience, like say someone does have like a 680 credit score and they're looking for something that's like, like a high-end commercial set of apartments. Like, in your experience, is it better for the person to kind of get assessed by you to kind of see where they are, so then you can kind of help? Do you help place us with other people that can possibly go in on the deal? Do you do things like that, or?
Yeah, I can do that.
Okay.
And usually for those type of deals, it has to be $1 million plus.
Okay. And also, like, if, for example, I'm an architect, and I personally would like to eventually like build multifamily and things like that.
Mm-hmm.
Is it, as far as the qualification to build multifamily, it's the same as just building a basic residential dwelling. Am I right? It's like the same pretty much. You're building a regular, like a regular house or a residential.
So overall, the qualification is, do you have the money? Do you have the experience? That's what it really comes down to.
Right.
And I guess the number one would be the money. They really want to see if you have the money. So on development, it's 50% of the land and up to 70% LTV of the ARV. So we could do it up to 85% loan to cost, up to 70% LTV, and
Okay.
a max of up to 65, between 65 and 70 ARV that we're going to fund you.
Awesome.
So as long as you have your 50% down plus your interest, your holding, if you have your capital in place, they're going to approve you.
Okay, good.
Experience doesn't really matter per se. Some of them do, but I have a couple that don't really care about the experience. As long as you have an experienced GC,
right,
you'd be good to go. And they've done, 3 to 4 of the same type of deals in the last 3 years.
Right,
I
great.
just want to see people that are actively doing it. They know what the market is. They've done it successfully. So that's what you saw on this one where it said bio. We want to see the bio.
Oh, I see.
Going to be doing it just to see that they have experience doing that.
And again, I guess that's why it's also important to link up with people who have had that experience. If you don't, have that experience as well too.
Definitely, yeah. Because if you have a mentor, I'm working with a developer now in Miami, and we're talking about a project that he's made construction on, and he said he made a couple mistakes in the beginning and lost $3-4 million. So
wow,
if you were to meet up with someone like that, that's a developer that's been through it, that knows what issues they run into, that could save you $3-4 million out your pocket. That would be a good mentor. Start that mentor relationship, or have a consultant on the project with you if it's your first time, and just pay them a fee to work alongside you to make sure you don't run into those mistakes or issues that's going to cost you a lot of money.
nice. My next question is, I'm a veteran, so I have a VA loan, and I've always hear like other vets, they'll talk about how they built a multifamily with their VA loan as leverage. Are you familiar with that?
Yeah, you can do that.
Oh,
we don't do VA, but you can do that through the VA.
okay.
Yeah, I would definitely do it because you guys like they fund you almost 100%. You're not bringing any money, so you could use that as your first experience, make it successful. Now it's on your track record.
Okay.
And then if you're doing development too, one thing you have to keep in mind is that it has to be at least 30 to 60 days within that time period as far as being shovel ready. They're not going to lend you any money if you have 6 months a year still to go to get the property entitled and permitting approved.
Right, right.
So and technically you have to have your soft cost money unless you already own the land. If you already own the land and you have equity in the property, then we can even refinance you out of that, give you cash based on the equity that you have in the land, and you can use that to cover your soft costs to get the property shovel ready.
Nice.
And then we'll do the construction loan.
I see. Okay. Thank you, Camille. I appreciate it.
Anybody else have any questions? Kelly, you have any questions? Camille, how can we get in contact with you? I mean, I know how I can get in contact with you, but
I did put my email in the chat. I mean, the website in the chat.
Yeah, that was my next question. That is true.
Let me see. I can probably, where's the chat? Where'd it go? Stop share. Yeah, I can put it in the chat. So I put the website in the chat. I'll put my email in the chat.
Okay. Yeah, and your website and everything that people can get in contact with you.
Yeah.
And then we'll reshare it. And like I said, when I would.
Don't share my cell.
Okay, I'm not gonna say your cell. I keep the cell to myself.
On the website, though, I gave you guys my cell, but
yeah,
if you're sharing with anyone else, give them the number on the website.
Right, right. So yeah, and I'm gonna, like I said, I'm gonna upload this on YouTube too. So I will add your information to that YouTube chat as well once I do that.
Yep.
Good.
Yeah, and I have so many clients. I have a lot of clients. So if you come to me and you need, just tell me what you need. Tell me what you're trying to accomplish, and I'll figure out the structure. Don't try to figure it out yourself. Let us do that. That's our job to make sure your loan gets approved and you get paid and everyone gets paid. So I always try to tell, because people sometimes will talk themselves out of things. They'll think they should do something when we know we do it. This is what we do. We do the in and out.
I know I do that all the time.
We know how to structure things. I tell people, don't worry about that. Your job is to find the deal. Find the deal that you want to do and bring it to us. We'll let you know if it makes sense financially and what we can do to structure it correctly so that we maximize the profits. Because we don't get paid until the deal closes. So we're working hard to make sure that it closes and it closes correctly.
Well, I'll definitely be calling you about consultation, most definitely. Definitely.
Yes. That's how we get paid. We consult, we go through the process, and we charge a fee on the end.
Oh yeah, that's what I wanted to know is like, is your fee a certain percentage of the deal?
Yep. So we charge anywhere between 1 to 3 points we'll charge. On the smaller deals, we have to charge higher because, say, for example, it's a $50,000 loan and we're charging 5 points. We're only making $2,000 because we have to charge a higher amount just to make, you know what I mean, a decent amount. On a regular loan, let's say anywhere from $250,000 to $1 million plus, it's between 1 to 3 points.
Okay.
That means percent. One point is 1%.
Okay. All right. Is that it? Anybody else have any questions?
How long?
Yeah, in the chat. Go ahead, Kelly. I'm sorry.
How long have you been in business?
I've been doing this for about 1.5 years now.
Okay.
My background is finance and accounting. I've been in finance accounting for about 15 years, but I just started investing myself, and that's how I got into this business. I bought my property, and a broker made a couple $1,000s off of me, and I was like, that's all you did?
Yeah.
Let me see, I can do this. This
Exactly.
is awesome. You know, it's all real estate related. Plus, for me, it's just, I meet so many people on a daily basis. Last week, I was on like 3-4 different development sites in Miami, and these projects are 40, 50, $80 million projects, and I'm dealing one-on-one with the developers. So it's a really, for me, fulfilling. I just love it. I love networking. I love meeting people. I love these different types of deals that I get. I get anything from fix and flips, cash out refis, rentals, development, condo developments, luxury developments. I'm always meeting people, always helping people. So I like it. That's why I do it.
Awesome. Awesome.
Yes.
Well, thank you so much, Camille. We appreciate you giving us all the good information.
Yep.
And we'll
all
make sure.
about relationship building. Guys,
Right.
network, connect with people on LinkedIn,
Mm-hmm.
connect with people in person. Before COVID, I went to at least 1 to 2 meetings a week between Eventbrite meetings, meetups, things like that. And that's how I met people. And that's, you know, once you meet people, you start developing these relationships, they start to trust you. They see that you're knowledgeable, you know what you're talking about, you know what you're doing. They'll start introducing you to other people. One of my realtors is someone who introduced me to a developer that's doing an $80 million deal. So, you know, it's really those relationships. They trust you. They won't go around you. They, you know, here's this information. Go ahead, do whatever you got to do. Let's close this. Let's all make some money. That's it.
Right.
So always, you know, remember to network, because you never know who could be your next partner or who can really help you with your next deal.
Absolutely. Absolutely.
Nice. Also, can you put her info in the chat? I don't see it yet.
Oh, I think it's going to you, Adanna. Wow.
Oh, okay.
It went to you privately.
Yeah. Yeah, I'm really excited because I was just talking to a developer mentor. I just got one like last week.
That's awesome.
Yeah, he's
I like it. Now you know me, and I got about 6 or 7. So
Mm-hmm.
me, I could connection. Like, hey, I got this guy.
That's right. That's right. So I'll definitely be calling about consultation. What are your hours for that?
As you can see, my phone rings all day. So.
All right, I'll call you after the call then.
No, I got some calls to make. But yeah, I'm a morning person, so I usually tell people call me first thing, because throughout the day it's like conference call after conference call, meeting after meeting with clients and different deals. So the best time to really reach me, and you know you'll reach me anywhere from 7 a.m. Eastern to about 11 a.m. After that, you probably won't get me.
Okay.
I'll call you back, but you probably won't get me to talk to me right then and there. But I do follow up.
Okay, great.
Are you
All right,
guys
well,
all
thank you.
working on multifamily development? Anyone doing fix and flips, rentals, anything? What type of deals are you guys working on?
Well, I just started the Facebook group, so we're just, my focus is really multifamily, but I know a lot of people in the group are, you know, have different types of investments that they do. They either do a fix and flip, new construction. So it's different things, but I'm trying to build up a group of people because I like multifamily. I think multifamily is the way to go. Me personally, just, you know, so that's why I started the group, just to focus on multifamily. But I know everybody has their preference on what they want to do. So, you know, of course we
and keep in mind too, if whoever's saying and talking about development, you can also partner with the city. You like if your local city owns land free and clear, you can JV with the city.
Okay.
And we'll give you 100% of the construction as long as it's under that 65% of the ARV. So if you're building something that costs, let's say, $2 million, and the ARV is $5 million, we'll give you 100% of that because it's below 65% of the ARV. That's our max that we lend.
Oh, thanks. Yeah, that's a good one. That's a
So
job.
all you're really coming to the table then with is your interest-only payments or your cash reserves. That's it. Your interest reserves.
Nice. Okay. I really appreciate that. I'll start looking into that as an option as well. Currently, I just been looking in my area, Newport News. I haven't been able to find a lot of multifamily. So then I start being a little more creative and thinking like, well, maybe I got to build them, you know?
Yeah, it's cheap to build. It really is.
Yeah, it is. Yeah.
Outside of the COVID, before that, we were doing 90% for 1 to 4 units. If you were constructing, we were doing 90% of the purchase price and 100% of the construction. So you only had to come to the table with 10% down plus your holding costs.
Oh,
Doing
wow.
the construction. So development is where it is. If you're buying someone else, you know, you're buying a multifamily that's existing, you're kind of buying someone else's mess because you don't know what's really wrong until you really start going in there fixing stuff up. And so if you have the money to do it, it's a great, and it's in a great area and the returns are great. Yeah, definitely. But if you have that opportunity to build, absolutely go for it.
Nice, nice.
Sounds good.
All right.
Any more questions?
Our fix or flip programs, we can do up to 100% financing as well there too. It really comes down to you can have just your cash to close, your closing costs, and your holding costs. And the only reason why we're doing a lot of interest reserve now is because of what's going on with the pandemic. And you know, so many people being out of work and we don't know if people are going to pay their rent. So we want to make sure that these properties are somewhat stable before we lend on them.
Okay. That's good stuff.
Yeah, but check out the website. If you look on the website, it has all the different loan types. Let me I'll share my screen real quick so you can see. The website, so it has all the products and stuff on here. We do go a little bit lower than $1 million, but that's right now on a case-by-case basis, just because of the influx of deals I've gotten, just to be able to focus a little better. Like I was saying, on those smaller deals, you have to charge so much just to make and it takes the same amount of time as a bigger deal. So we can get you a pre-approval within 24 hours. That's that one-page app that we went over. Once that app is completed, I can usually turn around terms in 24 hours. We can close in 10 days on those simple deals. If it's a little bit more tricky, of course, it's going to take a little bit more time. We do pretty much everything: cash out refi, rental loans, business loans, commercial loans, daycare, portfolio. If you want to purchase a 10, 20, 30 unit portfolio, if you want to refinance a portfolio, we do hotels, refis, construction. I have a Marriott and a Hyatt right now doing a refi and a construction. We have fix and flip lines of credit. That's not back open yet. We shut all this down when the pandemic came out, but it might come back soon. That's a good option. We also do lines of credit for construction, or just in general. We'll do a line of credit up to 20 million.
Wow.
So if you're the type of person that's going to be doing deals back to back to back to back, the line of credit is perfect for you because you'll be qualified once and approved once, and it's extended for a year. And you'll just use that as much as you need to, kind of like a credit card, the whole year. And then once you're done with that year, you'll either get an extension or get an increase if you did well with it. So single family ground up, we do restaurant financing, commercial ground up, pretty much anything that has a real estate collateral behind it. Self-storage, gas stations,
Wow.
assisted living, nursing, car wash.
Wow. Good stuff.
So can you pull money out of your 401 for the down payment?
Yep.
As long as it's your money, right?
Yep. You can use other people's money too. That's what we talk about. As long as it's in a business account before closing and you got what you need for your closing, you're good to go.
Nice.
I have as far as financing for other types, I'm trying to think of different things that we can do, like AR financing. Like I have a client right now that has accounts receivables upwards of like 10 million, So we're helping him get in that accounts receivable financing, possibly like a $10 million line of credit. He's an Apple distributor, so he sells like 1,000 iPads to different people that sell at retail. I have a couple of gold mines in the U.S. and one gold mine in Africa. They're looking for JV partners, so I brought them to a couple private investors.
What exactly is the JV?
That's a joint venture. So,
Okay.
say for instance, you have a multifamily you want to buy that's $5 million. You found the deal; it's worth 10, but you need $2 million to put down. You don't have it. You come to me and say, "Hey, Camille, I need a JV partner." I'm like, "Okay, I got the $2 million. Let's sign this contract. We're splitting this deal 50-50. We're going to partner up."
Oh, okay. So it's all about finding the deal.
That's your only job, find the deal. What else do we do? Gold mines. I mean, anything, commodities, anything you can think of, really. I had one guy that came to me. He was like, "I'm trying to do a dating app. Do you have anyone that'd be interested in funding that?" And I did. I took him to a venture capital partner. And he was just like, the budget was too high though. He was just using all the money for marketing, so they didn't approve it. But like I have connections, so
Right.
if you're looking for if there's anything financial, you can always reach out to me and say, "Hey, do you have anyone that could do this?" It's probably going to be a yes.
Yeah, and so Camille, in the case of like something like an app or something like that, or you pretty much just kind of need like, I mean, you need the person to come forth with the business plan, you know,
Absolutely.
the presentation, all like the bells and whistles, so they can be properly
Yep.
presented to sell
Yep.
the project, right?
Yep.
Okay, cool.
Yep. Have everything together and have your ask is number one. What exactly do you want? And number two, what are you going to do? How are you going to get this money back? What's your plan? So
Okay.
yeah, whatever presentation you have, whatever financials you have, whatever, if you're already operating, what it's currently doing, all of that.
Okay, sweet.
Yeah. And I have a lot of techie people too. I have a lot of connections in California. They're like, "You need tech deals?" So
Yeah, your website looks very polished and nice, and all your forms. Did you create those yourself?
I did. That's part of what I had up on my screen. I had so many tabs open. But yeah, I use what's it called, Canva, and I create all those flyers for free.
Nice. Looks very professional.
Thank you, thank you. Anything else you guys can think of? Obstacles you came up?
I think that's it. Thanks so much. I'm so glad that I was able to talk with you and everyone else is, and we appreciate it.
You're welcome, you're welcome. Feel free to reach out. Enjoy your evening, guys. Thank you so much for having me.
Thank you.
All right. Bye-bye.
Bye.
Thanks, Adanna. I appreciate it.
No problem. I'm going to post it on our page too.
All right. Let's roll.
Stay on for a minute, Adanna.
Okay. Well, let me stop recording. Hold on. Hold on.